What's up everyone, it's Caddy with Money Vesting. So in this video, we are going to be talking about one stock which could represent an opportunity here. Why? Because Warren Buffett seems to love it. So we are going to be taking a look at this company, and of course, if you haven't guessed already, that company is going to be none other than Occidental Petroleum, ticker symbol OXY. I have done videos on this company before. It is down quite a bit from its recent highs. It is dropped a little bit over 24-25%. Well, Warren Buffett has seen that as an opportunity to pick up more shares as recently as yesterday. So if you come over to the SEC filing from Warren Buffett and from Berkshire Hathaway, you'll notice that they have picked up Occidental Petroleum. This is the Form 4 filed with the SEC from Berkshire Hathaway, and you'll notice that the transaction date is as early as March 13th, 13. We got March 14th and then March 15th as well. And of course, purchasing, thousands of shares, millions of shares, 1.4 million shares picked up yesterday at $56.66. And the total share count for this company is now jumped to 208 million shares right now is what Warren Buffett owns. And that's, I think, 23 point something percent of his entire portfolio. So that's the number here. And again, as you'll notice that this is going to be warrants to purchase shares of common stock from Warren Buffett, Berkshire Hathaway. So wanted to go over, a little bit about the oil industry and talk a little bit about why Occidental, right? Why Occidental? Why has he been picking up so many shares? I'll kind of do my best to estimate as to why I believe some of the reasons might be. First of all, Warren Buffett has been involved with Occidental for quite some time. In fact, they were on the verge of bankruptcy, and they acquired Anadarko, very long ago, and they have been doing really well since. Of course, part of it is because of oil prices pushing higher, right? Oil prices got up to as much as $123 a barrel. So we did have a lot of energy companies do incredibly well. But since then, we have seen a significant sell-off in energy prices and oil prices, specifically down 47%. Now, in my previous videos, in fact, last year, I mentioned how there will be a short opportunity in energy stocks going into 2023 because of the fact that energy prices are coming down, oil prices are coming down, and the stocks were not, right? So energy stocks were staying higher even though we had oil prices roll over. Number one. Number two, their earnings are not going to be as strong or as compelling to what we have already seen in the past. So year over year, Occidental reported some insane numbers when it comes to year over year growth, 100%, 200%, 300% growth. In my opinion, they're not going to be able to do that anymore because of those higher comparables, right? You're now comparing against some high numbers, and as a result, that growth rate is not going to be that substantial. But nonetheless, let's just quickly dive right into it. So talking a little bit about oil right now, this is the forecast at the moment. So 2023, the forecast is for us to pretty much sort of consume. So this is the demand. So oil demand forecast from 2010 to 2026, pre-pandemic and right now the current forecast. And 2023, the consensus or the expectation is for us to consume about 101 million barrels per day. And this forecast is growing by just 1% per year. So 1% every single year. That's growing how much we're demanding oil. And 2026, 104 million barrels per day. Now, if we keep growing this number out into the future by 1%, and if you take a look at the current oil stock, combined, we're sitting at about, I think, 2.7 trillion barrels at the moment in known reserves, right? Known deposits of oil. And that number can go up. So for example, there's a very, very good meter that pretty much is a live meter kind of running down on how much oil there is left in the world. And this is also as of 2016. So this is not like super up to date. So I'm assuming this number has been bumped up, and according to other research that I did. And again, you can take a look at oil stocks, total oil stocks at the end of December 2022 in North America, Asia Pacific, and Europe. You kind of combine these numbers and you get to roughly around 2.5, 2.7 trillion barrels. And if you combine that with what the expectations for forecast is in terms of consumption, give or take, right now, oil has about 47 to 49 years left, right, in the world, right? That's how many years? Like probably in our lifetime. So if you are, in your teens or if you're 20s or 30s, in our lifetime, there is going to be a point where oil is going to significantly start depleting. We're going to see reserves going down. And the hope, or the expectation at least, is that we're going to make that transition away from fossil fuels over to renewable energy faster, right? So we're going to be able to see that adoption happen as we kind of progress in our lives. And people are going to move away from fossil fuels over to renewable energy. Of course, electric vehicles have a lot to do with it because you're pretty much using batteries and renewable energy in that sense. But then eventually Elon Musk has also mentioned, that we're going to be having planes, flights, aircrafts, spaceships, even ships and a lot of things. Like pretty much all travel and logistics is going to be transited away from fossil fuels over to renewable energy. Now, my guess is that, obviously Warren Buffett has been buying a ton of Occidental. Like now it's over 23%. It's not a small position anymore. Like earlier it was, but the fact that he's been picking up millions of shares every single day. And I think he picked up earlier in March as well. And he bought more yesterday and the day before and the day before that. I mean, he's just consistently plowing money into these. So my expectation really is that he is expecting the oil prices to stay elevated as we continue to deplete our reserves and consumption continues to go higher. And the adoption may not be as swift or as fast as what many people anticipate it to be. Right, that's the only one of the reasons why I could see Occidental being a value/growth play. In other words, oil prices coming down right now, that's a good thing for inflation, but eventually kind of finding a new low, right? Not really coming down to $20, $30, $40 per barrel, but instead coming down, stabilizing, and then maybe in the future as reserves start to run low, there is a possibility that we see a spike in oil once again, because what's going to happen when supply starts to run out? If demand stays constant and supply starts to go down, we all know basic economics, right? If demand comes in, supply is not there, prices go up. And vice versa happens if there's too much supply, very little demand, price comes down. So I think the expectation really is that the adoption here is not going to be as swift, or the transition towards renewable energy is not going to be as swift. And we are still going to need a lot of fossil fuels in order to make that transition. And as a result, as the demand continues to go up, supply continues to go down. And again, that $2.5 trillion, it's not a fixed number. There's constantly new supply of oil being discovered. There's new deposits, new places where countries are obviously finding oil. So that number is also going higher. So it's not like it's going to be fixed. It's already gone up over the last 10, 20 years as new supplies and new deposits are being found. So that number can also go up, supply can also go up, but that rate at which supply goes up versus how much demand goes up is what also really matters. Now, if you take a look at, Occidental Petroleum's numbers, right, in terms of revenues and cash flows and, the book value and, price to earnings and all that stuff, if you take a look at the income statement, the revenues have really grown, especially in 2021 and 2022. So you'll notice that they were doing about 17 billion, 20 billion, 17 billion. And then in 2021, as soon as oil prices really started going higher, 25.9, almost $26 billion, because it's a pretty zero-sum game for, oil companies, right? The higher the oil price is, the more the revenue they bring in. Simple procedure, right? Because they're selling oil, one of the most important commodities in the world, and if the price for that commodity goes up, they make more money, right? It's very self-explanatory. In 2022, their revenues skyrocketed to $36 billion and their gross profit to $24.5 billion. And as a result, their net income was up from about, a couple $billion to over $13.3 billion for the company. Another thing that I find very interesting about Occidental is the fact that they are constantly paying down debt. I think that's another thing why this becomes such a compelling trade, because if you take a look at their balance sheet, if you take a look at their total debt, it's literally, every single quarter it's been coming down. They're strengthening their balance sheet. It's come down from 37 billion down to as low as 20 billion. So in the last 8 quarters, they've paid down about $16 billion in debt. That's about $2 billion per quarter is what they've paid down in total debt. If you take a look at their free cash flow, so if you come down to their free cash flow, if you take a look at their annual growth, just insane, right? They've gone from 1.4 billion to 7.5 billion, and then in 2022, generating over $12.3 billion. But again, the question really becomes, now, is this sustainable? Now, I think knowing Warren Buffett and having studied him for so long, it is not really a quick trade. If this was a trade for him, he would have already taken profits, right? He would have already called it a trade and then just be out, right? Because it's already done really well. Occidental was one of the best performers of 2022. In fact, if you take a look at how well it's done since March 2020, it went up a little bit over 700%. And in 2022, of course, when the entire market was battling through inflation and interest rates and everything since December, or let's just do January of 2022, Occidental went up another 160%, right? So last entire 2022 did really well. So knowing Buffett, I think this is more of a long-term value play, considering the dynamics with supply and demand of oil, the consistent pay down of debt, and very strong cash flows being generated, and kind of combining with the fact that oil prices, according to his analysis, it's possible, because you have to be analyzing oil for investing in oil companies. You can't just be looking at the price to book value. You just can't look at these metrics and not really look at how oil is going to do. There's definitely an element of oil analysis as well. So my best guess is the idea that oil may not see a significant downside, might stabilize at some point, and then it's possible that it starts to push right back up in the future once again. Now, another thing that I'm really interested about Occidental is the price to book ratio, because that's more of a value oriented ratio. If you come over to valuations right now, it's trading at really, really low P multiples at 6 times earnings, 9 times earnings on a forward basis. So incredibly cheap price earnings multiple. But again, the growth rate isn't really there. If you take a look at the earnings growth here over the next 5 years, right? Analysts are expecting for earnings to decline substantially, 32%, 4%, 23%, 45%. So the expectations for earnings are to really come down over the next 5 years. But again, this is my expectation that this is not really a quick trade or a 2-year or a 5-year trade for Buffett. This might be a decade long, or 20, 30, or, hopefully he's alive that long. But this is definitely a longer term play, value play, in my opinion, for him, considering the dynamics that I mentioned in demand and supply. Now, price to book, is a good metric. It's kind of like a net worth of the company. It's kind of like a, assets minus liabilities. That's what a book value is. And if you take a look at total assets for the company right now, for Occidental, currently trading at the total assets are 72.6 billion, and total liabilities are 42.5 billion. So if you take a difference of the two, so if you do 72.6 and subtract that by 42.5, so 42.5, we get $30 billion. $30 billion as being currently the book value of Occidental Petroleum. And right now it is trading at $51 billion. So I would actually be interested in Occidental if it drops maybe by like another $10-15 billion in market cap. That's like 20% drop from these levels. And we're going to be looking at around $45, $46. I don't think that's too much to ask, considering the book value will be close to 1, right? So that's what we're looking at. That's what I'm personally looking for. And I'm not going to do like an earnings estimate, because if you take a look at the earnings forecast, right, 629, that's expected to drop to $2.60 by 2027. But this again becomes a more of a 5-year, 4-year trade, as opposed to what it could be more of a value-oriented, longer-term, decade-long investment in oil. As supply starts to run low, demand continues to remain constant, and we may not make that adoption that swiftly. So if you take that earnings estimates, that's expected to decline by 20% on a year-over-year basis. So even if we go with, let's say, minus 10% per year, P multiple stays steady at 10, 12% discount rate, and 10% margin of safety, then we pretty much end up nowhere, because the fair value would end up at $15.43, because the EPS is declining so much that it doesn't even make sense for us to be buyers at these prices. Right now, Occidental is at $57.50. So let's just update that. Yeah, that would mean like a 73% drop from current levels if the earnings are expected to decline consistently over the next 5 years. So from an earnings standpoint, from a price earnings standpoint, there's not a lot of growth expected for this company over the next 4 to 5 years. But again, if you take a look at the longer time horizon, right, 10 years, 20 years out, then maybe there's some value there, because the cash flows are improving, the balance sheet is improving, the oil dynamics are at play. But let me know your thoughts. Let me know what you think about Occidental. And I've got a support down to 52.27. It could be a good tradable support for Occidental, but of a good buyable support in terms of a longer term investment here. I'll be looking at closer to $45, $40, if anything. And again, I'll be doing more research on this company and the oil supply as well. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Let me know your thoughts on this company and what do you think, right? You know, is this a wise investment? Is Warren Buffett actually making a mistake towards the end of his career? I don't think so, but let me know down in the comment section below. Would you buy Occidental? What are your thoughts? Let me know down in the comment section below. As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe, and a link to our Discord and Patreon is going to be down below. Happy investing. I'll see you all in the next video.